know the drill. You've seen the crazy social media flexes, you've heard all that confusing Wall Street jargon, and you're probably sitting there wondering, how do I actually get started without losing my shirt? Well, today we are completely swapping out those complex formulas for a clear, incredibly straightforward roadmap to the stock market. Okay, let's just go ahead and confront the elephant in the room right off the bat. What if I lose my money, right? I mean, it is the #1 fear that keeps people sitting on the sidelines forever. But today we're going to replace that anxiety with a bulletproof foundation. We are building your knowledge so solidly that fear simply doesn't get to dictate your financial future anymore. To get us there, we're following a 5-phase roadmap today. Overcoming that initial fear, dialing in your knowledge and purpose, actually making your first move, building a smart portfolio, and finally, locking in that investor mindset. So let's dive right into phase 1. Overcoming the fear and just normalizing that beginner anxiety. Because remember, every single investor starts at absolute zero. Look, it is so easy to get trapped in this wild storm of complicated strategies and dense finance jargon, but we are leaving all of that behind us. Instead, we're stepping into the light and focusing purely on practical, actionable steps that literally anyone can follow. Investing doesn't have to be some massive puzzle that requires a Wall Street degree to solve. Which brings us to phase 2, knowledge and purpose. This is really the bedrock of all smart investing. Before you drop a single dollar, you need to know what you're actually buying. A stock isn't just some random blinking ticker symbol bouncing around on a screen. It represents fractional ownership in a real, functioning company. Think about it. When you buy a share of the company that makes your smartphone or the brand that brews your morning coffee, you are literally becoming a partial owner of that business. If they succeed and grow, well, you succeed right along with them. But before you make that purchase, you really have to ask yourself, why am I doing this? Are you chasing financial freedom, prepping for retirement, building long-term wealth, or maybe you're trying to create a steady stream of passive income? Defining your personal why acts as your compass. Without it, trust me, you'll end up making reactive, highly emotional decisions the very minute the market gets a little bumpy. All right, let's move to phase 3, making your first move. This is where we take real action, even if your funds are kind of tight right now. So your actual bridge to the market is setting up a beginner-friendly brokerage account. But listen, there is a massive golden rule here. You must only fund it with money you can comfortably afford to leave completely untouched for the long haul. Never, ever invest your rent or your grocery money. The market inherently has waves, and you absolutely need the gift of time to ride them out comfortably. Seriously, if you're holding out until you have thousands of dollars saved up to start, please stop. Starting small is vastly better than waiting forever. Even $20 gets you off the sidelines and builds invaluable real-world experience that reading a textbook just never will. Getting your feet wet is how you actually learn the mechanics of the market. And that real-world experience leads us perfectly into phase 4, building a smart portfolio through consistency and keeping things simple. I know it's incredibly tempting to chase that hyped-up rocket ship stock you saw trending on some late-night forum, but you gotta resist that urge entirely. Smart beginners anchor their portfolios in large, established companies or broad index funds. You don't need to hunt for a needle in a haystack. With index funds, you can simply buy the whole haystack. It just naturally reduces unnecessary risk while you're still learning the ropes. This all boils down to a concept called diversification. If you throw all your cash into one single stock, that is incredibly risky. Even massive, globally recognized companies can hit unexpected storms and lose value. But if you spread your money across dozens of different companies or entirely different sectors, your overall risk just plummets. Diversification is your shield. And speaking of risk, people waste literal years trying to consult some magic crystal ball, guessing the absolute perfect day to buy in when prices are at their lowest. Well, here is a surprising but universal truth for you. Time in the market almost always beats timing the market. Building a solid habit of investing a set amount every single month, like clockwork, removes the guesswork entirely. It steadily builds your wealth regardless of what the market is doing on any given Tuesday. Finally, we hit phase 5, the investor mindset. This is all about managing your emotions and thinking long-term. Here's the reality check. Your portfolio is going to go up, and you'll feel like an absolute genius. Then it's going to drop, and you'll get that awful knot in your stomach. Welcome to the roller coaster. The secret to surviving it? Refuse to panic. Short-term turbulence simply does not define your long-term destination. Because let me tell you, emotional decisions will absolutely sink your portfolio. Greed pulls you in to buy more when prices are unsustainably high, and panic makes you sell everything when prices inevitably drop. Successful investors operate like a lighthouse in a storm. They are calm, they are disciplined, and they strictly follow the goals they set on day one, completely ignoring all the outside noise. So many beginners ask, okay, but what stock will make me rich this month? We need to stop asking that. You have to shift your perspective entirely. Ask instead, what investments are going to grow steadily over the next 5 to 10 years? Real generational wealth isn't some get-rich-quick scheme. It's a tree that needs years of time and patience to grow its roots. So, bringing it all together into one simple roadmap, learn the basics, open that account, start small with simple investments, diversify your risk, invest consistently, and above all, stay calm. There is no secret Wall Street magic here, folks. It is simply consistent discipline applied over time. Remember, every single master out there was once a beginner. The only difference between you and a seasoned pro is that they actually decided to start. And since time is the ultimate multiplier of wealth, the real question isn't whether you're ready to take your first step today. The real question is, what will it ultimately cost you if you wait another 10 years?